All right, welcome back. Today, we're diving into a real classic tech showdown. You know the type. In one corner, you've got the legacy titan, a true empire in enterprise software. And in the other, the cloud native innovator, the challenger built from the ground up for the modern workforce. Yep, this is Oracle versus Workday. So, what's the real fight here? Well, it's actually pretty simple when you break it down. Oracle, the empire, built its entire kingdom on owning the infrastructure. We're talking the databases, the servers, the absolute core plumbing of a business. Workday, the challenger, is just laser focused on owning the workforce, the people, the money, all that human-centric data. It really is a battle for the very brain of the enterprise. Now, in a fight like this, our gut instinct as tech investors usually tells us one thing: bet on the sleek, fast-growing innovator. We just expect the challenger to run circles around the old guard. But what if I told you the story over the last 5 years has been the exact polar opposite? And yeah, this slide, it just lays out the brutal reality. Over the last 5 years, Oracle, the so-called legacy player, has returned a whopping 172%. Meanwhile, Workday is actually down almost 23%. This just completely flips the script on what we'd expect. So the big question is, why? What on earth is going on here? Let's break it all down. Okay, so to really understand that crazy performance gap, we've got to pop the hood and look at their finances and their business models. Because this is where these two companies show you just how fundamentally different they really are. It really all boils down to their core strategy. Oracle's game is all about scale. They want to be the everything store, bundling that legendary database with cloud infrastructure and this massive suite of applications. It's all about creating one giant integrated ecosystem. Workday? They're the complete opposite. They're a pure play specialist, obsessing over creating the absolute best user experience for just two things: HR and finance. And that difference in strategy, well, it leads to a huge difference in size. I mean, think of it like this: a giant oil tanker versus a nimble speedboat. Oracle is the tanker, with a colossal estimated revenue of over $57 billion. Workday, while it's growing fast, is the speedboat, coming in at a much smaller $8.4 billion. The sheer size of Oracle's revenue is a massive, massive factor here. But here's the thing, it's not just about how much money they make, it's about how much they keep. Oracle is an absolute efficiency machine, turning all that revenue into a massive 30.8% operating margin. Workday, on the other hand, is just now hitting this really critical moment, this inflection point. They've gone from a negative 13% margin back in 2020 to finally becoming profitable. They're just now learning how to flex that earnings muscle. And all of this culminates in what might be the single most important number for a lot of investors: free cash flow. This is the real, actual cash a company generates that it can use for whatever it wants. In 2024, Oracle is expected to churn out a mind-blowing $11.8 billion. This is the cash lifeblood that funds everything else. But, having all that cash is one thing. What a company does with it, well, that tells you everything you need to know about its real priorities. Are they rewarding you, the shareholder, today? Or are they pumping every last dime into becoming the giant of tomorrow? And this slide just illustrates that fundamental trade-off perfectly. Oracle's cash, it's primarily going right back to shareholders. We're talking $5.5 billion in dividends and buybacks, which gives you a solid 1.22% dividend yield. Workday's cash is going right back into the engine. They're spending a massive 31% of their revenue on research and development, paying for code, paying for innovation, and paying out zero dividends. Okay, so we've covered the money. But beyond the pure financials, there's this whole other strategic battle being waged around risk, competitive advantages, and of course, the future of AI. Just look at the difference in how they think about risk. Oracle uses debt, and they use it aggressively. They have a high leverage balance sheet with 104 times billion dollars in debt, and they use that to juice their returns. Workday, on the other hand, has what you could call a fortress balance sheet. They are net cash positive, which means they've got more cash than debt. It is a much, much more conservative way to run a business. So where do these guys actually dominate? Where are their strongholds? Well, Oracle's moat is deepest in industries that are all about physical products. Think manufacturing, logistics, that kind of thing. Workday owns the world of services, healthcare, education, industries all about managing people. And the real dogfight? It's happening right there in the middle, in that mid-market battleground. And what about the big one? How are they positioned for the AI era? Well, Oracle's strength is its customizable, hybrid tech stack that can connect with a company's older on-premise systems. It's complex for sure, but it's flexible. Workday's big bet is completely different. They're all in on a unified core with one single data model for everything. Their argument is that this clean, simple approach is going to let them innovate in AI way, way faster. So what does this all cost you as an investor? It really comes down to the valuation. For Oracle, you're paying a price-to-earnings multiple of about 31. It's a classic value play, especially when you throw in that dividend. For Workday, you're paying a multiple over 62. That's a 100% premium. You're paying twice as much for each dollar of earnings, and that's the price for its future growth and the safety of that debt-free balance sheet. All right, so this brings us to the big finish, the final verdict. And listen, the goal here isn't to decide which one is the better company. It's to figure out which investment path makes the most sense for your goals. So let's do a super quick recap with this handy cheat sheet. Oracle, it's the clear winner on sheer scale, profit margins, paying dividends, and having a lower valuation. Workday, it wins on growth speed, balance sheet safety, and a much, much higher spend on innovation. It really is a tale of two completely different investment profiles. Ultimately, it really does come down to this fork in the road. You go with Oracle if you're looking for income from dividends and the stability that comes from a market titan, and you're okay with them carrying a lot of debt. You choose Workday if you have a much longer time horizon, you want to bet on AI and cloud growth, and you prefer the safety of a company with zero debt. Which leaves us with one final question for you. After seeing the surprising performance, the financial DNA, and the strategic roadmaps for both of these companies, where do you place your bet? Are you investing in the empire, or are you backing the challenger?